Hello, everyone. Thank you so much for joining us. Thank you for joining us on this first panel session of the day. My name is Nikou Asgari. I'm the digital markets correspondent at the Financial Times. And I'm joined here by a wonderful panel, Alesia Haas, Chief Financial Officer of Coinbase, and Samara Cohen, Chief Investment Officer of ETF and Index Investments at BlackRock. And we are here to discuss beyond the Bitcoin ETFs. As Brett outlined in his opening remarks, the Bitcoin ETFs have been a big deal this year for the crypto and the institutional investors interested in crypto community. But we're here to talk about what they mean, the impact of them, but what next beyond that. And I guess the first place to start, actually before we do so, there will be time for audience questions as well at the end, so please do send them in, and I will ask them of Alesia and Samara. And Samara, I'd like to start with you. I mean, BlackRock went in big on this ETF, and I'm interested in why, when many of your peers still are skeptical of Bitcoin as an asset class. What underpins that belief?
Thank you, and it is exciting to be here with all of you in this incredible space at this moment in markets and in market history. I think what's really exciting about Bitcoin ETFs is they provide a bridge between crypto and traditional finance, and one that investors really wanted. Now, to get to your specific question, to be clear, like BlackRock has gone big in ETFs. We have 1,300 of them trading around the world. They are a market access technology that gives investors that bring investors into all different types of asset classes, bonds, equities, markets around the world, and increasingly, they give investors access to strategies that they didn't have access to before. So our conviction and commitment is on the utility of ETFs in an investor's portfolio. And we really went on a journey with respect to that when it comes to Bitcoin over the past 5 years. And I will share, and some of you may have heard me say this before, the first time I was approached, which was probably 5 or 6 years ago, around would we partner on a Bitcoin ETF, I had a lot of questions around why. Like, I'm a career markets nerd, really. I love everything that provides more transparency and more access to markets. But in the case of Bitcoin, the question I had for the people that were, kind of pitching this to us was, doesn't an ETF actually kind of deprecate the whole promise of crypto market structure? It's transparent. Took me 90 seconds to do my first Bitcoin transaction on my phone. So, like, why an ETF? I can come in, all day long to talk about why it's really hard to buy a high-yield bond on your own and why ETFs are incredibly powerful in giving people diversified access to the bond market. But why crypto? And I think what happened really over the past 5 years was, first, investor interest in Bitcoin as an asset class really did increase significantly. And we were hearing from investors, all different types of investors, that they wanted some allocation to Bitcoin in their portfolios, and they found the existing on-ramps insufficient for what they wanted to do. And I think that came down to, what seemed, trading costs, depth of book, liquidity, all of these things were not as transparent. Custody was complex. And on top of which, and this might be the most important factor, investors who are really looking to make an allocation to Bitcoin didn't want to manage their risk across two separate ecosystems. They wanted to be able to see their whole portfolio, manage risk in the whole portfolio, and the ETF was a building block and a bridge that let them do that alongside the rest of their investments.
So I'm curious what types of investors you're seeing the most demand from now, 6 months since the launch? Who is buying this the most?
Well, we actually have some reasonable, albeit point-in-time data on that right now, given that the 13F filings, which are point in time from a couple of months ago. But there really are breadth of investors. Now, of the filing investors, it was brokerages, hedge funds. Brett mentioned the one pension fund that publicly filed. But probably 80% of the buying has been in what we call self-directed investors. We find the term retail kind of a sloppy term, so kind of prefer to talk about the self-directed investor who is making their own allocation, often through an online brokerage account. So our analysis foots with, I think, what others have said out there, that probably 80% is from that investor base.
And Alesia, from your perspective, this demand for the Bitcoin ETFs, are you seeing that translated into other crypto products or other, interest beyond that? Like, is this an avenue that's opened up now?
Absolutely. So I think it's important to just note what a landmark event the approvals were, as it brought Bitcoin to many more mainstream investors than we had previously seen, and it dominated headlines for weeks. But what we've seen is, on the institutional side, obviously, that it's brought interest in Bitcoin ETFs, but increasingly Bitcoin spot, the need for custody, the need for trading, the need for financing. And so what we saw for our own customers on our platform was 40% of our institutional customers had adopted 3 or more products in the first quarter around the Bitcoin ETFs. What we're also seeing, though, is growth in retail trading. We saw net growth on retail and institutional spot markets, and I think it just speaks to the momentum of this asset class and the credibility that an ETF approval brought to the overall market that generated more interest in the space.
On your point around momentum, and Brett mentioned it in his opening remarks around RIAs and recommending the ETFs. At the moment, they seem quite wary, and there isn't that sort of floodgate opening. Is that a fair assessment, and why do you think that is?
I wouldn't call them wary. I'm curious your thoughts on this as well. I think it's important to wind back the clock a little bit, where there was lack of clarity on when we would see the approvals. And so if we go back to December of 2023, there became heightened speculation that we would start to see ETF approvals in early January. But it wasn't clear. It wasn't certain that we were going to get that approval. And so you didn't have many of the RIAs or the funds preparing for months and doing their due diligence and getting ready for the approval. People were sitting more on their heels and kind of watching. So as Samara said, what we've seen so far is self-directed activity. We've seen people proactively come to the market, but what we haven't seen is the long tail, where people need to then think about their own processes of asset allocation, their own approval, their due diligence, their assessment of the BlackRock funds or the other providers' funds. And I think that will happen. I think that we are just on the slow journey of adoption. You probably have the statistics better than I do, but the growth, the assets that were allocated to Bitcoin ETFs make it the fastest growing ETF category that we've seen, period. I mean, we've had net inflows in $12 billion plus in 3 months, which is a very impressive statistic when you compare it to any other ETF asset class. So I think that the long tail is coming. I wouldn't call them wary. I would just call them, this is part of the process of adoption.
I would call them wary, actually. I think that that's their job.
Right.
An investment advisor is a fiduciary to their clients. This is an asset class that has had, 90% price volatility at times in history, and their job is really to construct portfolios and do the risk analysis and do the due diligence, which, to Alicia's point, they are doing that right now. So I think this is a moment in terms of really putting forward important data, risk analytics in terms of the role Bitcoin can play in a portfolio, what sort of allocation is appropriate given an investor's risk tolerance, their liquidity needs, but that's what an advisor is supposed to do. So I think this journey that we're on is exactly the right one, and they're doing their jobs.
Okay, I'm with you. You mentioned uncertain if the Bitcoin ETFs are going to be approved in January, and I want to touch on the ETH ETF, which we're still sort of waiting on approval. I was reading a Reuters interview last week in which Gary Gensler said that they will move as fast as the issuers will move. So how fast can you move, Samara? What's going on with the ETH ETFs?
What will move? I didn't hear the first part. What's going to move as fast as the issuers
They
will
would move. The SEC would move. That's what he said in the interview.
Oh. Well, we have a active filing, so I cannot comment on ETH ETFs. So you guys are just going to have to invite me back next year.
Okay, I'm with you.
Brett promised announcements. I heard that at the beginning. So just to be clear, you will get none from me.
Appreciate the clarity. I mean, beyond the ETFs, tokenization of real-world assets, again, as Brett mentioned, is an area where a lot of traditional financial institutions are exploring, including yourselves. And BIDL, the Tokenized Money Market Fund, is something that you've launched. Can you talk me through where the demand and the use for that is coming from and what the thought process is behind that?
Sure. So for those of you who aren't aware, Brett mentioned this briefly at the beginning. BUIDL is a tokenized short-duration treasury fund that we launched on the public Ethereum blockchain. I'm going to now pivot and talk more broadly about tokenized treasury funds and not specifically to BUIDL. We're not the broker-dealer on BUIDL. But this is an incredibly exciting space for anybody who is student of financial markets, a participant in financial markets, the opportunity to tokenize all types of financial assets and actually seeing real world application and use cases is very important. Now, to answer your question in terms of where's the demand for tokenized treasury funds coming from, it's really coming from it's the desire for treasury management by digital native firms. So firms that want to use treasuries to earn, the way anybody would use treasuries, you want to earn some yield on your liquid cash portion of your reserves. But if you are conducting your business on chain, being able to have that in a tokenized format is really accretive to your business.
And both of you, really, I'm interested in what the evolution of the tokenized money market fund space in particular, what you think that may mean for the stablecoin providers, given that you're offering yield and they're not fundamentally.
Do you want me to start and you can add on?
I mean, sure.
Sure. Look, I think personally we're going to see tokenization of every asset, just like we saw digitization of every asset. The financial markets have moved over centuries from physical to then online, and we believe they're going to move on-chain. And so when you think about a tokenized money market account, I think about, great, it's a money market account. Today we have money market accounts that live aside deposit accounts. They live aside prepaid cards, checking accounts, different forms of how we interact with the US dollar for different use cases, as you point out. Do you want yield? Do you want bank risk? Do you want treasury risk, et cetera? Stable coins are a digital dollar in many cases. The large ones are USDC being the one that Coinbase is most actively involved with, and that it has direct US government risk. It is on a public blockchain. In this case, we have it on Ethereum. We have it on Base, which is our layer 2 solution, that enables different use cases than a tokenized money market account, which is a security, or a tokenized deposit, which would be bank risk. But I think these assets will live alongside other financial assets, just like we've had multiple different financial assets with different use cases in today's market.
So you don't think the stablecoin providers should be concerned or competitively concerned?
I think it offers a different use that people will find value for that use case, and that they may have multiple of these different tokenized assets in their portfolio.
I totally agree. I'm actually surprised that this has even been a question. These are such complementary but different use cases. Stablecoins are for payments, and money market funds or treasury funds are an investment strategy for the liquid portion of your portfolio. So I think having those two actually is extremely complementary to the ecosystem. I do think that if I look at the trajectory of the last few years, one of the things that has been a learning for me is that the importance of public blockchains in this sort of tokenization forward. I would say a few years ago, we thought that private permissioned blockchains were probably going to lead with respect to tokenization of investment strategies, and something that I think the capital markets world has learned a lot in this past 10 years of a lot of change in OTC markets is how quickly markets, as they adopt a new technology, can become fragmented. For me as a career derivatives person, I'm thinking especially about kind of post Dodd-Frank, EMIR, MiFID implementation of swap execution facilities. And so avoiding that sort of fragmentation is something that can be done, I think, with the use of public blockchains, and that has been a pivot in where it feels the attention of the industry is going.
What do you make of that, Alesia?
I think it's such an important point, and we couldn't agree more. And I think you can look at analogies back to the internet space, like in the early days where you had AOL was a closed garden. if we all lived in closed garden systems, we wouldn't see the value that we do in the internet today, where we can send data anywhere across various different platforms. So we think wholeheartedly that public blockchains, permissionless structures are the way to grow this future. More resilient, more hardened, more accessible. That will lower cost, it'll drive adoption, and we think it's the right mental model to approach it with.
I want to come back to the point around traditional institutions getting more into crypto and blockchain use. What does this mean for Coinbase's position? And I ask this because as large traditional institutions, for example, the CME is considering doing Bitcoin trading. How do you view the competitive landscape if it evolves in that way? What does that mean for Coinbase?
We could not be bigger cheerleaders. We could not be more excited about each and every one of you getting into crypto, getting into blockchain. Look, we have hundreds of financial institutions in the market today. They live side by side. We've seen how every bank used to be physical. Now it's digital. Now they're going to be on-chain. So we fully embrace and hope that the entire market moves to an on-chain world, adopts crypto as part of their product suite, adopts the back-end architecture that we think will create these benefits that we've spoken about here today. So we welcome it, wholeheartedly welcome it.
Sort of got a tangential question from the audience here, and please do send them in, which asks, JP Morgan acts as AP for Bitcoin ETFs, Coinbase acts as Bitcoin custodian. Do you believe that JP Morgan and other bulge bracket banks will ever custody Bitcoin? And then tangentially, what would that mean?
I sure hope they will. I think that what we all seek is regulatory clarity and a level playing field so that we can compete on our products and our offering to each of our customers. Today, that world doesn't exist. We don't have regulatory clarity. Banks are prohibited in some ways from being able to custody Bitcoin due to SAB 121. That's become politicized, as we've seen in the recent weeks. So I hope that changes. I hope that banks can participate and offer custody of these assets.
What do you make of the role of the banks at the moment?
I mean, I completely agree with Alesia. I think that the forward requires a lot more participation in crypto by banks, and actually it's my hope that they start to play a more active role in advocating for what a more integrated ecosystem is that allows them to custody crypto alongside other asset classes.
And you mentioned regulation, Alesia, and I'm interested in what you both, like Samara firstly, do you have clients at the moment who are interested or sort of sitting on the sidelines, both of you sitting on the sidelines and waiting for clear regulation and what that looks like for them? How much of that is a barrier at the moment?
Coinbase absolutely has clients that are sitting on the sidelines waiting for regulatory clarity. Yes.
I mean, people are literally sitting on the sidelines because the regulation tells them they can't participate in crypto. So absolutely, I think that's one of the reasons it's so exciting that this conversation is happening now. I think Faryar's conversation with Wiley Nichols will be really interesting. This is it feels like there is an acceleration of energy in the U.S. around policy, which is welcome by all of us, I think.
Yeah. And on that, I guess, policy and regulatory point, Alesia, I know Coinbase has donated to pro-crypto candidates through the Fair Shake PAC alongside other crypto companies. I'm curious what you make of the prospect of Trump becoming president for the crypto industry. He's touted himself as a pro-crypto candidate. Do you think that would be good?
Crypto is bipartisan. What we've been so pleased to see, whether it was the SAB 121 appeal, whether it's FIT 21 that got bipartisan support going through the House in the last couple of weeks, crypto is bipartisan. There's 52 million Americans that own crypto, and they're coming from all walks of life. We are here to support pro-crypto candidates.
Including Trump?
We are here to support 52 million Americans and how they choose to vote for their president.
Okay, I'm with you. We have more audience questions. One of which asks, does the arrival of traditional financial firms signal plateauing of Bitcoin but increased velocity or flow to the next 10 DeFi apps, etc.? I guess they're asking what this means for the DeFi space, the increase in...
Can you say that one more time?
It says that does the arrival of traditional financial firms signal the plateauing of Bitcoin but increased flow to the next 10 DeFi apps? I guess the transition from... a transition to the DeFi space?
I think that they're all growing. I think as we talked about earlier, we just started to see broader adoption of Bitcoin as we saw the Bitcoin ETFs. I think you're starting to see new apps being developed in DeFi that are getting a lot of excitement and attraction. So we're seeing Friendtech getting some excitement. We're seeing Farcaster, which is online social. We're seeing creators build new NFTs that are getting different distributions to their communities. We're seeing tokenized real-world assets. So I think the answer is this space is nascent, and we're going to see it grow in many directions. And I think that the introduction of new market participants just continues to drive the overall growth of the market.
I think that's
It's such a funny question, right? I mean, just because if I think about this, 10 years ago or 5 years ago or whatever, we were all saying, blockchain technology is really the future. Like Bitcoin, not really going to be a thing, but we're very excited about the technology applications, and it almost feels like that has reversed. I think both of these things are unfolding in parallel, both the utility and use of Bitcoin and how that's going to be integrated into portfolios alongside kind of the broader DeFi ecosystem and how the technology is applied in financial market settings, and both of those things are going to continue in parallel.
Yeah, I mean, I still have conversations with people who do separate the two and say we can't and we won't. We're wary of touching crypto and Bitcoin itself, but blockchain as a technology we're interested in. But you're saying that you almost can't hold that stance anymore.
I think that the convergence really does come down to, as we were saying before, like passion around tokenization. Everybody who is in the markets would like to, generally, unless the source of your revenues is really from friction in markets and connecting buyers to sellers, like most people, definitely ourselves, because our job is to manage portfolios for investors and help them get better returns. We want to reduce the costs associated with, whatever the strategy is, bringing it to life in an investable portfolio. So all abilities to kind of reduce, the multiple points of friction in a market, which is really the promise of tokenization. That's where everybody gets interested, and especially the applications to the asset classes we know and have been trading in portfolios for years. Mm-hmm. And I guess also the asset classes we would like to be trading in portfolios, but aren't yet, given the lack of secondary markets and liquidity.
You mean illiquid assets?
Yep, exactly.
Yeah. I mean, on the point around separating crypto and blockchain,
they're so integrated, it's hard to separate them in my mind. I think that what we do sometimes is we conflate issues. So Bitcoin in and of itself is a blockchain, it's a token, it's a store of value asset. People have the store of value use case around Bitcoin. You then have Ethereum, it's a blockchain, it's an asset, it's a medium of exchange. It's a developer platform. People are building the new applications on top of this. You have layer 2s that are making those layer 1s more efficient, faster. Sometimes there's tokens because you need a token to actually validate transactions. And so these things are intricately linked in many ways. I think that, though, there are so many wonderful use cases that we will get with blockchain technology around, as we mentioned, direct-to-creator, direct-to-user communities, financial transactions that instantly settle on-chain, real-world assets that are tokenized that then settle on-chain and can be fractionally distributed to broader global liquidity pools. And so those require tokens, those require blockchains, they're tied. But I think that the Bitcoin store of value is a unique investable asset that we now look at as a new asset class in and of itself.
And on that difference,
just like stablecoins are new forms of money movement. And so we just have to talk about what it is and stop talking about these as like.
And I would also make an ask for this group here, because this term real-world assets, I find very entertaining for a couple of reasons. And I do think that, I think generally speaking, crypto has a branding problem, and there's a whole bunch of things, especially to the extent we're trying to, build bridges. RWA means something very different, very specific, like in the banking world, so the acronym isn't helpful, but also the suggestion that, crypto isn't a real-world asset, I'm not sure. So I think there could be a better term than real-world assets. I think the desire to kind of move forward and improve the way financial assets broadly are exchanged is a productive direction.
We speak about it as the world has moved from offline to online.
I totally get it.
And on-chain is the future. So we're all driving towards a world that we all transact on-chain.
But if it's a real-world asset on-chain, is it not a real-world asset anymore?
No, it's just an asset on-chain. It's an asset.
I want to go back, Alesia, you were mentioning the difference between ETH and Bitcoin, or Ethereum as a technology and Bitcoin, and it goes to a question that someone's asked, which is, once the ETH ETF is launched, how should people think about allocating to the ETH ETF versus the Bitcoin ETF, given those differences, I suppose?
The market will dictate how it reacts, and I'm not one to speculate in general. I think that it continues to demonstrate just broad adoption of the asset class in general and broader momentum that we will see in these markets. Ethereum is a smaller asset than Bitcoin if you look at the percent market cap, and so like directionally, I would argue that it should be smaller, all things considered, just given the relative size of these two assets. However, over time, they will drive their own trajectory. If we start to see more applications built on Ethereum, that will drive more interest in Ethereum, I believe, over time. Crypto has yet to have what we call like its killer use case in terms of a dApp that we see billions of people using every day as a crypto dApp. If that is built on Ethereum, and if we see that growth, I could see that starting to drive momentum, but we could see the same growth with Bitcoin. It's early days, early days. I think they all have a lot of opportunity.
Okay, I'm with you. And with that, that is a good place to stop. So thank you both to Alesia and Samara. Thank you to our audience for joining us.